Hey guys, Forex Capital here. Let's take a look and see what Ethereum dollar is doing today. So looking at the daily chart, just like you guys know, I like to start with the daily chart. This still looking bullish. Still looking bullish even though we broke below the 23% retracement. As I've been talking about this double bottom right here since like July. I mentioned, hey, if we break above 249, we're going to be looking bullish, and if we break above 287 in a hole, we're going to have a double bottom with a target of 480. And look at this, back on September 1st we reached out 480, a little bit past 480, 488 it looks like, and then we had this massive pullback. I mean, this massive pullback is scary, don't get me wrong guys. Our double bottom is completed, but we still, even though that the pullback looks scary, there's still hope. I mean, you know, I don't like to trade based on hope, but there's still some fundamentals, not fundamental, but technically speaking, that we could start moving higher again. So, by the way guys, if you guys like the video, hit that subscribe button. Don't forget to pulverize that like button, because that's the only way we're going to reach out to 7 billion people, and we're going to help everyone trade the crypto markets. Remember, we're posting all this information for free. We just want to make sure everyone understands how to trade crypto. So keep that in mind, guys. We're here to help each other out, and don't forget to pulverize that like button, because that's going to help out the channel a lot. So just like I said guys, so the double bottom is completed and now we have the pullback. I would have wished that we would have held about the 23% retracement, so basically 400 bucks, because and then, you know, if that was the case, and then we have a room for the 161% retracement, which is 534, and more likely that would have been just it would have blasted through that. So the next target was 595, so we would have had a lot of room of improvement, but it is what it is. So we got to work with what we get and know what, and not so much for what we want. So looking at this, the good thing is we're holding above the 78% retracement, so it's 304, but I wouldn't do anything right now guys. I mean, either we pull back to the 78% retracement again, or we break higher, because right now from a risk to reward perspective it doesn't make any sense. So let's just do this for the sake of fun. If we were to place a position right here right now with a stop loss right below the 78% retracement, let's just set a target of, you know, 485. Look at this, your risk to reward is 2.19, and you guys know that if I'm not at 3.5, I won't do it. Risk to reward is very crappy. I feel like you're in the middle of this channel, and when you're in the middle, I don't like trading middles. I only like to trade breakouts, and that's about it. I think in breakouts you make the most money. I mean, I know some people that make money on channels, but not me. So I wouldn't do much at this particular time. I would either want to pull back to 304, or if we break and hold above the 23% retracement, it has to be a decent candle too, and holding above the 20-day moving average, and then we're talking here. Then we have some room here for improvement. Let's just move this fibs here. Let's do from this. So if I do the fibs from the March 13th low to what, September 1st high, look at this, the $400 mark, it's like crucial. So here's the thing, we have to, and this is why we did not close below the 61% retracement. So this is making sense now. Just about there, and it looks like it's a little bit higher. There you go. So we are holding above the 61% retracement. This level is crucial. If we break below that, then we might even see a retest of the 200-day moving average, because I don't think the 50% will hold very, very strong, especially when we had such a massive pullback. So we just have to be careful. And if we're going to continue moving higher, then your target is, we have to hold above this 23% retracement, which is basically 400 bucks. If we don't hold above this, then I wouldn't do anything. And if we break above, and then you will put your stops right below the $400 mark. That way your risk will be very low, with a target of basically 595. So you'll have quite a bit of room. And if you measure that from the risk to reward perspective, so let's just say you do that you do 394 with the risk to reward. Yeah, 595. Look at this, 11.13. So this is the thing. This is what's gonna make you money in the market. Risk to reward, risk management. I cannot stress how important risk management is. You see, risk management is essential. So you have to do that, guys. So just keep that in mind while playing with Ethereum dollar. I mean, I'm gonna be looking to place a position after we break $400. So just keep that in mind, guys. If you guys liked the video, hit that subscribe button. Don't forget to pulverize that like button. Thanks again.